Just give me a sec. Sorry, my external mouse is not with me. Okay. My external mouse is not with me, so I'm finding that it's a bit difficult to work properly. Yeah, so can you guys see my screen? Can you see my screen? Okay, someone said we are muted by admin. Hold on, let me check if there's any way I can. I'm just getting familiar with this Telegram stuff, so just allow me some time. Okay. Charles, you guys should help me with this stuff. Finding difficult to share. All right, maybe I'll do that individually. Okay. Please, but make sure your background is not noisy. So the reason why I want you guys to unmute your mic is so if there's a loss in connection, you can just let me know. Okay. So can you guys speak now? Sure, you guys can speak now.
Yes.
All right, great. Great. So please, at any point the connection is lost, can you let me know? All right. Okay.
All right.
So can you see my screen?
Yes, we see.
Okay. This is what. Okay, you know what? I need to. Who will stay with us to the end of this meeting? Who will stay with us to the end of this meeting? Because I want to meet every other person, then just allow one person stay unmuted. So at any time the connection is lost, that person will let me know. So who will be able to stay to the end of the who?
So I will go and submit it. So AGM training. Okay. AGM training.
All right, so back to what I was saying. We are not going to waste much time. All right. First of all, we are going to be starting on GBP. Of course, you guys know that this is our analysis. So right about now, this is GBP. All right. Remember that from on the monthly time frame, this asset has been very much bullish for some time now. I think from 2020 up to date, GBP has been very much bullish. Any bearishness will just some level of pullback to some certain areas of discounts, and the bullish rally keeps continuing up and up. So we are not trading against the order flow. We are still going to trade in line with order flow. So we just scale down to the weekly time frame to see what this asset is doing right about now. And we can see very well that, remember, we did this analysis on the episode 1 of the Black Wallstreet Call, where we saw this asset dips right into this fair value gap, which is of course the imbalance. The price was able to partially fill the imbalance, but then the key point was right now the focus as to why this asset closed as a rejection was that it hit the mean threshold of this imbalance, right, which is somewhere around here. You can see it rejected, and up to this time it was just trading above that, which is of course a discount. So we go on the daily time frame, and on the daily time frame, we remember that recall that this asset made some sharp patterns right at that discount, which is of course the inverse head and shoulder, which is a reversal pattern. So once we were able to spot um, this head and shoulder pattern, inverse head and shoulder precisely, and we noticed that on the daily time frame we did dig into the fair value gap here, in line with also closing the main threshold of the weekly fair value gap. This was enough sign that this asset was going to go bullish, right? It was about time for it to rally, and also the liquidity, right? At every high and low, I need to state this out clearly. At every high and low. Now this is a high, right? At every high, we just know that what is there is liquidity, right? That with liquidity resting above every highs and every lows. This also was a liquidity void, liquidity pool rather, right? This was a liquidity pool. So liquidity simply means money. At any time or at any point you see liquidity, right? Just know that we have some pool of funds, pool of money, either at the institutional level, or most times it's always at the retail level. So this candle, right? This two candle, the essence, the reason why these two candle did spike was because it needed to grab some liquidity here, some sell side liquidity here. So this candle needed to grab that sell side liquidity before the bullish rally. Now, one thing you guys need to understand is that it takes liquidity to move the market, right? It takes money to move the market. So the market needs to first of all sweep that liquidity, which was resting somewhere below. And you can see how it's in deep closed. And after grabbing the sell side liquidity, the next focus would be it grabbing the buy side liquidity here. And hence why if you add all these confluences, the inverse head and shoulder, the grab on the sell side liquidity, you just know that the next level target would be grabbing the buy side liquidity and up to this this area, right? So now my focus, now this is the analysis we are having for the week. What I'm expecting is that you guys need to understand. I keep saying this, that the market buys at premium, the market buys at discounts and sell at premium. So the market moves in this the market buys at these areas, buys at the discounts and sells at the premium. This is where the concept of supply and demand, come to play. If you don't understand what discounts and premium simply means, just apply the ideology of supply and demand, right? So the market would have to, for it to continue this bullish rally, right? For the market to continue this bullish rally, I expect this asset to pull back to a significant area of discount. All right, I need this asset to pull back to a significant area of discount. I cannot just start buying it because this area is not, it's not a significant discount area. So the market cannot just start buying. I can see some people are already buying this asset and some people are also selling. So I wouldn't advise you to sell this asset because, let me take this off. If you sell this asset, right, we just know that it's pullback, right? But then you are not sure because during pullback there are a series of manipulations. The market might just choose to close this imbalance before it continues to pull back. And if you're not properly positioned and all that stuff, you keep hitting stop losses. So it's not even the best time to buy, and it's also the best time to sell. So the best time to likely buy this asset would be if this asset pulls back to a significant area of discount, which is highlighted. You can see me highlighting here. And also, let's check out let me take my FIP and check out this point to this point. You can see that this discount is very much valid. It's very much high probability. Let me use, I think that's the English. This discount is very much high probability. You can see the FIP 9079. That's the highest level of discount, right? So it can start buying. Let me take this off. So let me take this FIP off. So this guy might just start. Let me take this off. Might just buy here, right? This is an order block. You guys, if you are familiar with the concept of ICT, you know what order block is, right? This guy can start buying after hitting the order block. Of course, this order block, the upper part of this order block is is aligning with the FIP 79, which is also the highest level of discount. So anything from here, we should be expecting buys. But then, if you're not, a kind of person that you don't like big stop loss, you can just wait for the market to show some break of structure on lower time frame, like the 4 hours time frame. You can wait for this asset to enter this area and some break of structure on the H4 and all that stuff. Then you can start buying. That way you have a smaller stop loss. So this is what I'm expecting GBP JPY to do. I'm expecting GBP JPY. Sec, I'm looking for one particular. Yeah, I think I've found it. So what I'm expecting GBP JPY is to first of all pull into these discounts and then start buying. So the first level target of the buy would of course be this area, the 186.789. What is resting above this area? Buy side liquidity. The liquidity, remember I said liquidity at every highs and all that stuff. So there's a liquidity, buy side liquidity here, and we expect this guy to first of all dip down into this discounts before the massive buy starts. All right, let's calculate the amount of pips that's around about that's in this rally. We have about 500 pips rally on just GBP JPY. That's about 500 pips rally. And remember, that's just the first level target. The overall target is 195.687. That's my overall target on GBP JPY. So if you want to calculate the amount of pips on GBP JPY, this asset would likely be giving. So what's this? Respect yourself, Luca. Expect yourself. Right, so the overall target is about overall target is about 1,300 pips. First level target about 500 pips. Overall target about 1,300 pips. And also remember that the market, once it gets to this first level target, it will always give some pullback, and we can have so many opportunities to add some positions. And in a rally of over 1,500 pips, we could end up making 2,000 and 2,500 and all that stuff. So this is my outlook for the GBP JPY. This is my outlook for the GBP JPY. So currently, it's not even the best time to sell, and it's not also the best time to buy. So just wait for some pullback into the discount, then you start buying this asset. So that's my view on GBP JPY. Of course, my clients in the market outlook reports, of course, share the entry points and all that stuff, or maybe on H4 time frame, so we can buy this rally and we make some significant amounts of money. Now, I need to point out a particular principle, because some guys do not really understand that waiting or patience is also a strategy in Forex. You have to understand that patience is also a strategy in Forex. Your ability to wait for that high probability setup to pile up pretty nicely for you to, evolve is very important in the market. Now, I learned these particular principles that I'm about to share now from a very successful Forex trader. Now, the principle is that the market trends 40% of the time and consolidates or ranges 60% of the time. Now, what I was able to draw from this statement is that it's the ability of a trader, right, to manage to protect his capital 60% of the time and look to grow his capital 40% of the time. So as a trader, you need to understand that 60% of the time, the market might not just be cooperating. And during that phase of the market, what you need to look out to do is to protect your capital. So 60% of the time in the Forex market, you should look to protect your capital and look to grow your capital 40% of the time. All right. So a lot of traders will fall into the trap of trying to grow capital or trying to flip their accounts 60% of the time. Almost every time they try to grow capital, they try to flip their accounts. They don't know the faces of the market, the different faces of the market. And hence you discover that it's after you blow your account, it's after your account is gone, that the market will just start cooperating, respecting your analysis and all that stuff. It's not some manipulation. Yeah, we understand that there is some level of manipulation at the bank level, but then you guys need to understand that if you're able to decipher, right, when to grow capital and when to protect capital. You will know how to manage yourself in these different phases of the market. That's why you hear some hedge fund managers who talk about risk on and risk off environment. Risk on is when investors are optimistic about the market, they're looking to risk, they're looking to buy this, looking to buy that. But then on a risk off environment, these guys, you notice that their focus will now switch from that capital growing, from that growing of capital phase to now more of capital protection. They are looking to protect their capital. A lot of guys, a lot of you, if you've been following me, you know that July and this August, I've not really made a whole lot of money in the forex market. Why? Because the market has not just been cooperating, right? You can see that this pullback started from this pullback GBP started from July. You can see July 23rd. This pullback started from that July 23rd. This is when the first rally stops. June 27. Sorry, June 27. This is when the rally stopped and it started pulling back. I had my first buy here, which I got stopped out. The market went into consolidation. At that point, I just held on to my capital. I was not even taking any more trades. And you can see people that were still forcing the market, they got wiped here. They still tried to buy, they got wiped. They tried to sell here, they still got wiped. And all that stuff, the market was just ranging, right? And now that the market has started operating, I mentioned that I called this trade, this rally. If you guys, if you were not in the first episode of the Black Wallstreet Call, check my my YouTube channel. Check my YouTube channel. You'll see that I called this rally. And now, if you took this rally when I called it, you should have made about. Let's calculate. I think this is where we. Yeah, this is where we entered. Should have made about 50 pips on just this rally that I called. This is because I know when the market is just ranging and when it's not cooperating. So you just have to understand the stuffs and look to protect your capital. From that July, you will imagine that from that point where I got stopped up to this point, I've not really made a whole lot of money. I am only down in equity 3.25%. I'm only down 3.25%. So when the market starts cooperating, when this thing dips down, you notice that in the first bullish rally, my first entry would be able to mitigate the 3.25%, and subsequent trades I'll be taking will all be profit, 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 profit. Right? So now tune your focus, understand that the market trends 40% of the time and ranges or consolidates 60% of the time, and just know when to protect your capital and when to grow your capital. So I don't know if you guys have been following, you understand all I've said on GBP. Are you there? Are you there? Are you guys there? Who's with me? Just type.
Yes.
Okay. Great, great. So you guys understood the analysis, right? You understood the analysis I did. But why is my singlet showing? What's this? Is my singlet showing? My good. Is this still showing? What is it now? What's it happen? It's still the show. Right, wahala. You like me, sure. So we have 26 persons here, 27 now. You guys are understanding, and you getting me? Please flow. Just let me know you are following me. Just unmute you, or you guys cannot mute. Those guys that are unmuted, you can just tell me you're following. Some persons are unmuted. Yeah, Onye can speak if you can hear me. Just think you are.
We're following, sir. We're following.
Great. So let's move to the next asset class. We are not going to waste a whole lot of time here. So this is for GBP, right? Let's check the USD, still there. So you understand from, let's go to the monthly time frame. The monthly time frame, these guys were still being bullish right from 2020 December 2020. These guys just been rallying, bullish rally and all that stuff. Any bearishness was just some pullbacks and all that. So Going to the weekly time frame, still in line with the order flow. The order flow we identified as the order flow is still very much bullish, right? So what we are here to do is to spot some discount areas. Now these are all the premiums I was able to spot, right? All the premiums. This is my premium areas indicates my areas of targets. So this is the first level target, second, and of course the last level target. Now, how was I able to spot this premium area? The first way I spotted this premium area was on this monthly time frame. You can see that this first one is the main threshold. When I say main threshold, I mean the middle part of the order block, right? The middle part of the premium, this order block, the equilibrium points. So this is the first level target. The second one is, of course, this area seems to be an a pool of liquidity at the institutional level. Yeah, it's a pool of liquidity at the institutional level. Now, of course, these guys really this should be like a mitigation block and all that stuff. Then my high here is my last profit target. Okay, so what we do is check on that daily time frame to see what the market is doing. Now, the market has not significantly pulled back to going to the monthly time, the weekly time frame. This market has not significantly pulled back to some areas of discount. So you cannot just buy. If you buy at this point, you might easily get stopped out because before the market just buys, this is not a good price swing. No, this is not how the market moves. If you've been in the forex market, you know that the market moves this way. So first move, come here, move, right, strike, move. This is how the market moves in waves, oscillation. This is how the market moves. The market moves in waves and oscillation. So you cannot buy at this point when the market is at this point, right? Assuming you buy when the market is at this point like this. No, you cannot buy. Are you getting? Let me use this one. Let me use 1, 2. Yeah. So you cannot just buy when the market is in a point like this. No, you have to wait for a pullback. So this is a significant area of buy. You have to wait for this string, come to the string low, then you buy from there. So if you buy at this point, you are open to the risk of getting stopped out. All right, and hence why we cannot just buy this USJPY at this point. So let's go to the daily to define some discounts. Right, I know that this is a bullish order block and there's some persons that will be looking to buy, but then I don't really trust this bullish order block because on JPY this guy it has to dip properly. It has to dip properly. But then if this guy moves like this, breaks this high, then probably this one should hold. But at this point, we don't know if this one would hold, and you're putting your buy limits at this point. You are opening yourself to risk because it's not a perfect time to buy. So what I would likely look out for is my first scenario on this asset would be that the guy just pulls back. So let me get this tool. Okay, but so I would love this guy to pull back to this area, then buys. Right? I love it to pull back to that area, then before any rally. That means it should have to pull back to this other block, which is a significant area of discount. So if it literally pulls back to this other block, then I would love this buy. This buy would be great. But then if this doesn't happen, now that's the first scenario. I would always give 2 scenarios. If this doesn't happen, then what you should expect to happen is that it will have to really go fully. What is this? Give me my tool, bro. Yeah, to have to break this place, then come here before the strike up. In that case, this area would be release. In that case, this area will be there will be some buy side liquidity pool here. So it will have to break this level, then pull back here. But if that doesn't happen, we still have to wait for a full pullback and all that stuff. So I don't really like the I don't like the setup that USD JPY is presenting. I don't trust it and I don't like it. So we'll just keep it on the sidelines for now. But then this is what you should be expecting. This is what the market is presenting to us. We just have to allow it to do its stuff. Once it does its things, it will always give us a perfect price stream. All right. The market will always give us a perfect price stream. At any point that you don't understand what the market is doing, the best you can do is to allow it time, give it time to unfold and tell the story as to what he's doing at that time. So whatever it does, then we'll talk about that subsequently. So let's move to the next asset. Next one is oil. Let's check oil. Let's check oil prices. Let's check oil prices. I'm already long on oil. I'm on buy as we speak on oil. So let's check the monthly time frame to see what oil did. So I remember that I called this sell, but that's not important, right? This is not important, but I know I shorted this asset. So what did happen is that on oil, this guy, since the rally was, the trend was bullish or the other flow was bullish, this guy has been going up for some time now, so he decided to pull back. It was a massive pullback. This pullback was very massive. And when it went into this area, it came into this area. This zone, let me plus out that zone so you see. It came into this zone. What is this zone? This is a breaker, number one. This zone has so many confluences. The first confluence is that this is the order block. This is a bullish order block. Now the second one, if you check this price pattern, this is more of a breaker. This is also a breaker confluence. The breaker points, okay, from this point you drag it up to here, it's a breaker point. So there were so many confluences. So when oil dipped into this zone, I knew that oil would have two scenarios to play. Either oil would have to break and close below this order block and this breaker. Then if that did happen, we know that oil will still continue to collapse. But then when oil dipped into this area, it was consolidated. You can see that this consolidation has been since October. It's almost a year since oil has been in this zone. It has been consolidating in this zone. During that point, I just kept oil aside. It wasn't in my focus. I wasn't placing any focus on oil. But then during June, July, we started seeing some, some blueprints, because when the market is about to move, it always gives some blueprints and all that stuff. So we began to see some blueprint. The first blueprint we saw was that this is how the monthly time frame closes. You need to understand, you need to study, you guys need to study the candlesticks on the monthly time frame. Each candlestick on the monthly time frame has a story it's telling. All right. Now this guy closed as a bullish engulfing, still at this zone. Then going down to the weekly time frame. This is what this guy did. On the weekly time frame, oil broke structure. On the weekly time frame, oil broke structure. The first break of structure was here. Check. I want to teach you guys reversal patterns. Now on the weekly time frame, you can see that this guy broke the structure. What is a break of structure? What is a shift in market structure? When there is a shift in market structure, we know that it's a reversal pattern. So the market broke structure, and the third confluence is that this guy was showing some reversal patterns. What is this? I want you guys to spot this yourself. What is this? Guys, check this out. This is an inverse head and shoulder. Okay, I know I'm doing it a bit slow. I'm a bit slow in this stuff. I'm using my laptop mouse. I'm not using the external mouse. So you can see this was an inverse head and shoulder, coupled with the fact that this guy broke structure, and coupled with the fact that on the monthly time frame it closed as a bullish engulfing. I knew that this guy is about to rally. The rally is about to start. You can see it dip going down. Let's zoom this in. Zooming this in. Let me take this off. What you do is that in order for you to buy, once you see that pattern, in order for you to buy, you have to wait for pullback to, of course, discount. You know that the market buys a discount and sells at premium. So the discount is this fair value gap here. This fair value gap here. Look at what the market did last week and the week before last. The market dipped into this fair value gap. You can see how it closed above the fair value gap. Then on the daily time frame, you can see that the market had also a fair value gap on the daily time frame, and it's looking more defined now. It's looking very, very defined now. So I'm already long on this asset. I'm already buying oil, already on long. So my stop loss, of course, my stop loss is somewhere around here. My stop loss is somewhere around here. I bought somewhere here and I'm long already. I'm currently in profit. So I call this rally that oil is about to rally from at the point where I called, which was somewhere here at $78 per barrel. Then my first level target is, of course, $100 per barrel. My first level target, let's go to the monthly time frame so you see my targets. First level target $100 per barrel. Once it breaks and closes above $84 per barrel, then the first level target on oil is $100 per barrel, and of course $120 per barrel. So oil is buying. Just look for some pullback to be adding your buy entries. Buy. Oil is buying. So if you are looking for backups as to if you did your analysis and you were still unsure as to what oil is doing, just know that oil is buying already. It's not about to buy, it's buying. And on the macro perspective, so the institutions are also backing the buy. All right, so you have two stocks that are actually backing. The institutions are also in this buy, and of course, technical analysis is giving us the entry as to where this asset is buying. So you can see that it's very nice. The price action, one thing you need to understand is that price action is always very clear. Don't conflict your screen with so many indicators and so many stocks. Just keep your chart clean. You notice that on my screen, I always keep, it's always very clean. I only use these annotations so I can tell you guys as to what I expect and all that stuff. So oil is buying. That's the first trade call I've made in the second episode of the Black Wallstreet Call, a buy on the US oil, on the crude oil. So next one, gold. Gold is lining up pretty nicely. Gold is lining up very nicely. So what we did expected on gold was that, look at what gold did. Just watch the price action of gold. I know I've always been repeating this gold analysis and all that stuff. Gold was buying right from 2020. You guys know, understand that during bad times, when the economy is not really stable, investors always push their money from high yield assets to low yield assets, which of course gold is a safe haven, and investors would always choose to put their money in safe haven. During the COVID-19 period, during the COVID period, oil was buying massively, and I remember that it hit the 2K level. Yeah, oil did hit 2K 2020. And during that point, it went into consolidation. Then 2022, it was a massive rally. But I wasn't really interested in this rally because it wasn't really clear. But then this short, you see this short from here, this decline from year to year. I was in this decline throughout 2022. I was shorting gold. Throughout 2022, I was on short positions on all my gold trades. I wasn't even buying any gold throughout 2022. If you check my history, my trading history for the whole of 2022, I was shorting gold. So gold, this short went into the discounts. Look at what it did. It started buying, all that. So currently, this is where gold is resting. So what we expect gold to do is, this is what gold is about to do. because we check to see the blueprints from the marketplace. Once the market gives us some, blueprints, we know what it's about to do. Once you guys see the chart pattern on what gold is doing, this is the monthly time frame. You can see, and you know how powerful patterns on the monthly time frame are. So this is obviously triple top, but we knew that this triple top will leave. For this triple top to play out very well, we need to watch the candlestick patterns and how it's forming at that area, right? You can see that this guy closed as a bearish engulfing. That's the first confluence, bearish engulfing. So this bearish engulfing, coupled with the fact that this is a triple top on the monthly time frame, shows that gold is about to collapse. That's two confluences. Then the third confluence is that this guy is currently trading at a premium point. This high, of course, it's a premium. This high is a premium point. You can see three confluences: head and shoulder, premium, and also the bearish engulfing. So that was the reversal pattern on the monthly time frame. But then we go to the weekly to see what it was doing. On the weekly, the guy broke structure. Gold broke structure on the weekly time frame. This is what it did. Broke the structure here, right? It came down and broke structure, pull back. And I can remember this is where I started calling my short positions on gold. Started calling my short position on gold. And what I did said is that still under these points, you can see that we have so many confluences that was backing up this gold short. So let's show you the head and also the right shoulder. This is still on the weekly time frame. So there were so many confluences that was indicating that gold was about to short. And remember that I made a call on the first episode that gold is shorting. The first level target, remember, we had was here. So if you did short gold with me when I made this call, 2 weeks ago, you've already hit the first level target, right? Before already hit the first level target on the call I did last on the first episode of this. So all these shorts, I'm sure we took some bits, we made some profit on all these short positions. What's the all right, so back to what I was saying. So gold did short. So what we're expecting now, I'm expecting some pullback to a premium, and of course, let me call this out. Let me delete some stuff. So I call some. Yeah, so gold has smashed that first level target and is still about to collapse very well. You can see that this area is the close of this imbalance, the fair value gap here, or the liquidity void. So this would be the first target. Once this hits here, we know that the next level target would be 1812.1, and of course the overall target, which is down this discount. So let's define the premium as to where we'll be looking to short gold. The premium is that we can see some imbalance here, imbalance in price action here. So we should be looking to short gold from here. Once gold pulls back into this premium, we're looking to short. So let's go to the daily time frame to define really our entry points. So the daily time frame still in line with that premium that we were able to spot on the weekly time frame. We can also see that it is also overlapping with the bullish order block on the daily time frame. So what I'm looking, once gold hits here, let me give you an expo. I have my sell limits order here. I have my sell limits order here. So you can also join me on this gold collapse. Of course my stop loss will go above here. My first level target will be 1870.25. So gold is still about to decline massively. Gold is about to decline massively. don't take this for granted. Stick around, take the trade. But then this is not a financial advice and all that stuff. But then take your risks, take risks appropriately, and others. So this is what I'm expecting. I'm going to short gold from here. Shorting gold already. I have my sell limit order somewhere around here, resting above here. So once the market pull back and hits here, of course, gold will be shorting. So the pattern is more like it has to. The pattern is more like this price string has to complete, hit this target, this level, and then begins to decline. So that's all about gold. Gold is still in the bearish decline. All right, gold is still in the bearish decline. That's it for gold. I think so. Let me entertain some questions before I move into Euro USD and GBP USD. Do you have any question? If you have any question on the analysis we've done thus far, just indicate and I will unmute you so you ask your question. God's power, you ask any question, so let me unmute you so you ask your question. So you
Okay.
God's power, you can ask a question.
Okay, thank you, sir, for this privilege. So please, I wanted to know on this gold, will price first of all take out the liquidity resting above that 1940 before it start coming down, like above the other bearish order block?
What's the price? What's the price? Let me spot it out. What's the price you said?
1946.
1946. Hold on. 1946. It has to do what? Take out this liquidity, yeah?
Yes, I'm asking, will price take out the liquidity before we see a downward movement?
No, I'm not sure. I'm not sure. Once it hits, remember this is a premium at the weekly time frame, so it's more like it's overlapping with this one on the daily time frame. So I don't expect, well, anything can happen in the market, but then I don't expect it to go past this area. Don't expect it to go past this premium. Once it hits here, I should be expecting some shorts, right? Because there's really nothing. This liquidity is not really that juicy for the market to go above it. But then anything can happen in the market. But then this one is more valid, right? It's more valid.
Okay, sir. Okay,
Yeah.
sir. Thank you.
Yeah. Any other question? Please, if you have any question, just indicate and I'll mute you to ask your question. No question, no question, no question, no question. All right, let's go to the next asset. All right, so the next asset we have here is GBP USD. Let's check out GBP USD to see what GBP USD is about to do. Yeah. GBP USD really made us a whole lot of money last year. We made a lot of money last year on just GBP USD and Euro USD. These guys were giving us massive. So you can see I've already plotted all my levels on GBP USD. So I'm not sure I'll be deleting them. I'll just be using them to explain what I'm seeing on GBP USD. So quick one, GBP USD has last year GBP USD did hit this area, and when it hit this area, it was showing some signs of decline. The first sign it showed was that after hitting this premium, it was more like a bearish engulfing was forming here. And when we went on there, I don't want to be going down to some lower time frame to explain what did happen throughout last year and all that stuff, but then I'll just be running through it as to what happened last year. So if you check the weekly time frame, there was a breakup structure still around here, and there was also some reversal patterns that was forming on the weekly time frame. So so after that was formed, GBP USD was collapsing massively, and the target was that it needed to grab the sales liquidity that was here, and you can see it did happen and all that stuff. So after grabbing the sell liquidity. If you check the 6 month time frame, this thing they hit some discounts, very low discounts, and you can see the market started. I won't call this a reversal. It started pulling back on and all that stuff. Right. So now what I'm seeing on the monthly time frame on GBP/USD is that GBP/USD has pulled back to a significant area of discounts, of premium rather. GBP/USD has pulled back to a significant area of premium. Right. Now that premium is that, look at what you can see. This is a bullish order block. This is an order block here. This is a discount. So let me define that discount out. So you see what it has tapped into that premium. It has tapped into this premium with the fib. Now this fib, this guy has dipped into a very significant area of premium. You can see this is the fib area as well. Fib area as well. It has dipped into. Now what I'm seeing on GBP/USD is that this guy is about to close as a bearish engulfing. Look at this current candle. This August candle is about to close as a bearish engulfing. Now this is the 28th. This webinar is posted on the 28th of August 2023. And in the next 2-3 days, the month is going to close. And the call, what I'm expecting on GBP/USD is that if this candle closes like this, if this candle closes as a bearish engulfing like this, then GBP/USD is going to collapse massively. It's going to collapse, and my first level target will be here, and of course the level target here. So I'm expecting it. I'm checking. I'm still waiting to see if this guy will close as a bearish engulfing. It's already closing. Today's already 28th. But then let's wait for the month to close. It's after the month have closed that we'll know what the market would unfold for us. Going down to the weekly time frame, we can see that, guys, you can see that this guy Shah is about to break structure. Is about to break structure. Is about to break structure. So if this guy closes as a bearish engulfing on the monthly time frame, and we come down to the weekly time frame and it breaks structure on the weekly time frame, then be rest assured that GBP/USD is about to collapse. So it's not even the best time to either buy, it's not even the best time to sell. All right. So we are in the middle of some indecision here. We are not going to buy, we are not going to sell. However, we've been able to position ourselves properly that whatsoever unfolds in the marketplace, we are going to play along. But mind you, the reason why this asset is, the reason why I'm having an 80% short analysis on this asset is that the bond market is already collapsing. The bond market, you guys know that GBP/USD somehow there is a correlation between the bond market and this asset. The bond market is already shorting, it's already going massive. So if that correlation should play out here, then GBP/USD is still going to short. So just have it in the back of your minds that this guy is currently at an indecision point, and we are about to either short the assets. So going down to, let's go to Euro/USD before we check the dollar index. Euro/USD. Still almost the same thing. Almost the same thing. Let's have my areas plotted out. The guy has pulled out massively to a significant area of discount, of premium rather. I keep saying discount. What is it? I keep saying discounts. I don't buy till discount is already in my mouth. So this guy has dipped into a significant area of premium, which is more like a breaker overlapping with the order block. And also still watch the candlestick for this August. Is almost closing like a bearish engulfing, and today is the 28th of August 2023. If this guy closes this way, what we do would go to the weekly time frame to watch a break of structure on the weekly time frame. If the break of structure on the weekly time frame looks valid, then we'll be shorting. Now what I'm saying is that this guy would first of all break structure. This guy would have to form what I'm seeing on Euro USD. This guy is forming a reversal chart pattern. Left shoulder head is about to form the right shoulder. So what I'll be looking out for on Euro USD is that I'll hold on and wait for Euro USD. First of all, it has to close as a bearish engulfing. Once it closes as a bearish, now the thing is, let's list it out in the order of priority. The first one is for it to first of all close as a bearish engulfing. So if it closes as a bearish engulfing, by month end, this month's end, then it has fulfilled our first criteria for shorts. The second one would mean that this guy would have to pull back to either form a right shoulder, right? Forming a right shoulder, it has to form a right shoulder somewhere around here. Also notice that we have fair value gap here. You can see that I've already indicated with this triangle tool. So this zone is a fair value gap. So if we dip into here, close the fair value gap, it will also mean that it will be forming a right shoulder. Right shoulder, it will have to break the structure. So once we see a violation, that's why what is this? So that's why I had this horizontal to this price point 1.06854. That's why I had this price point. So this guy breaks this structure, then we rest assured that Euro USD is about to collapse massively, and the targets would be down, 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 down. So that's the first criteria. The first criteria is closing as the bearish engulfing. The second one would mean it has to pull back, form a right shoulder, and then the third one would be break of structure. Once the break of structure is formed, what we do is to go to the daily time frame and the H4 time frame to watch for any pullback to premium. Then we short, pullback, every pullback we short. So it's a whole lot of money that is already unfolding on this asset. So the first level target would be, if that finally occurs, the first level target I have here, my overall target would be here, not the first level target. My overall target would be somewhere here, and probably this low. So there's a whole lot of money. There's a whole lot of money. There's a whole lot of money. A whole lot of money. You guys should just calm down. Just calm down, wait for the market to tell you I'm about to go. Now, the difference between me and every other trader is because I have this patience to wait for the market. Let the market give me the full story as to what he's doing. Once the market gives me that full story, I just know how to enter the market. Just know how to wait for the perfect point to strike. I don't waste pips. I don't waste percents, right? I don't waste percents. So there's a whole lot. There's a whole lot. Coupled with the fact that the bond market is already in a massive collapse. The bond market is collapsing massively. You guys need to learn correlation. A lot of you guys need to learn correlation, because there's a direct correlation between the bond market and the currency market, and of course the bond yields. The bond yields still, I don't want to be going into the analysis of the bond market and the bond yield, but then if I go into that analysis, you know that sentimentally and more of in the macro perspective, this asset will still collapse. But I don't want to go there. I'm just using the technical perspective to show you what is already unfolding, just so you understand what is unfolding in the future. Just have this idea as to what is unfolding in the future. Once you're able to have that idea, all you have to is just for you to position yourself properly. Just position yourself properly. So that's it for Euro USD. I think, of course, the same thing is also happening in the dollar index, the DXY dollar index. You can see it dipped into this fair value gap. Now it's about to close as a bullish engulfing. Once that happens, it goes to the weekly time frame to either wait for. Once that happens, this guy will have to pull back from a right inverse shoulder. Then, of course, you can see that there is a buy side liquidity here to grab the massive rally. If dollar index rallies, of course, JP USD, Euro USD will have to decline. So that's just it for all the analysis. I think I've been able to run through all the analysis. Is there anybody who have any question? If you have any question, just ask, so we answer it just here. Any question? Okay, I think we have a whole lot of questions. Grace. Okay, Grace, please ask your question, ma'am. Hello, Grace, are you there? You can ask your question, ma'am. Grace Wealth, are you talking? Are you talking? Are you asking a question? Or we should move to the other persons? I think she doesn't have any question to ask. Okay, Femo, let's hear you, sir. Let's hear Femo, sir. Femo, are you asking any question? You guys should just be raising your hand or be asking questions. I'll meet you guys to talk now.
I want to speak now. I want to speak now. Can you hear me?
Yeah.
Sir, can you hear me?
Oh, I didn't know. I was muted.
Yeah, I can hear you. I can hear you.
Okay.
Okay, I want to ask.
Who is speaking? Okay, Grace, hold on. I'll come back to you, please. Hold on. Let Favor ask, then I'll come back to you, ma'am.
Okay, sir. My
Favor, please
question.
continue, sir.
Okay, sir. My question, you made mention of correlation and you said if the DXY should rally, Euro USD and GBP USD, of course, should decline. But what if in a scenario when the Euro and the GBP index, they start rallying as well? What is going to happen?
The thing is, if that happens, most times with what I've experienced, what I've seen, if normally if the DXY is rallying, of course the GBP USD, Euro USD should collapse. But then if all of them starts rallying, then it's be rallying in a choppy way. Don't understand. There's not the right time to either buy. It's not a good market condition. So you should be looking to stay out of those conditions, right? You should be looking to stay out of those conditions when assets that are supposed to move in the opposite direction starts moving in the same direction. Okay.
All right. Thank you, sir.
Good
Yeah, is that all?
Yes, sir. Yes, sir. That's all. Thank you.
Yeah, good afternoon, ma'am.
Yeah,
All right. Okay, ma'am. Good afternoon.
You said GBP USD goes in line with the bond market. Can you please expand on the bond market?
Yeah.
Because most of us don't know which market is the bond market.
That's that's a whole lot of full training. It's not a question that I can just answer with a particular things. But once you got that training, it will take another scheduled webinar. All right, because it's a whole lot. We are going to be talking about the bond yields, bond markets, sentiments, and all that. It's not something I can just answer in just one statement. All right.
All right, thank you very much.
All right. But then what I'll do for you, ma, if you can send me a DM after the webinar, what I can do for you is to send you the correlations between the bond market and the currency market as to if the bond should buy, the currency would have to sell and all that stuff. Those correlations, I'll send it to you just after the webinar. If you can DM me and if I can compile that and send it to you.
All right, no
Right?
problem. And this is Anna. You're calling me Mama.
Yeah.
Okay.
So what?
I have a question, sir.
This is Anna.
Yeah, I can hear you. Can hear you, sir.
Okay, sir. Thank you, sir, for the
Oh, Anna.
I wanted to ask, sir, is this DXY making a market maker buy model?
This is your name. This is your name. Am I hearing you?
Okay, can you hear me now, sir?
Yes, yes, yes.
Okay, sir. I wanted to ask you if this US dollar index is making a market maker buy model. Like that is just my question to the upside.
Well, when you talk of market maker buy model, those things those things happen. How would I put it? Just give me a sec. Let me think of the best way to put it. Those things are fractal when it has to do with time frame. So I wouldn't say it's a market maker buy model. Just have to understand what I'm trying to say. What I'm trying to say is that I'm not entirely saying that that the dollar index is going to buy.
Okay, sir.
All right.
Okay.
What I'm saying is that I have some priorities. I have some things I've written down, the key points I've written down, that if each and every one of them gets fulfilled, then I know that the dollar index is fine. Now, the first criteria I stated was that it has to close as a bullish engulfing as it is doing now, right now, right? So if this month ends and the candle and it closes as this bullish engulfing, closes the way it is now, it closes like this, then the first criteria has been met, which is the close as a bullish engulfing, right? Now, the second criteria I made mention was that I have to first of all wait for a break of structure or a shift in market structure, which would tell me that it is about to also rally. So once it makes a shift of in market structure, then I know that this asset is going to buy or is going to rally. Then I also made mention that what I'm also seeing that is unfolding is that the market is about to unfold an inverse head and shoulder. All right, an inverse and head and shoulder. You can see that the first level, the left shoulder is already shown here. All right, the head here, and it's about. So I'm seeing something like this. This is what I'm seeing. Do you get me? This is what I'm seeing. So until each and every one of them unfolds the way I expect, then I will know that the DXY is going to buy. And of course, if the DXY is going to buy, anything that's inversely correlated to the DXY, that the GBP USD and the USD, of course, would sell. All right. So the market maker buy model, all those things would play out if these higher time frame criteria are met. So if all these higher time frame criteria are met, what I'll do is just to go down to maybe H4 or the daily and all that stuff to wait for the market maker buy model to buy, because you cannot just start playing with the market maker buy model when the higher time frame has not told you that it's going to buy. All right, the market maker buy model is more like it's more like an entry stuff. AMD. You know what AMD means? Accumulation, manipulation, and distribution, right? Do you get me, sir?
Yes, sir, I get you, sir. I get you, sir. Thank you very much, sir.
God's favor.
Yes, sir, I get you, sir.
Yeah. All right. So now you cannot just start saying, you cannot anticipate the market maker buy model when the higher time frame has not shown you that it is indeed going to respect that buy model. All right, because the institutional traders really check what is happening on the higher time frame, because that is what gives them the clue as to what the market is going to do. So if that clue is seen, if that clue is well presented, then of course the market maker buy model will play out, which would serve as the entry pattern and all that stuff. Okay.
Thank you, sir. Thank you very much, sir.
Have I been able to answer your question?
Yes, sir.
God's power, God's favor. I keep calling it
Anyone,
God's power.
okay,
All
thank
right.
you very much, sir.
So, all right. So I think I have some persons here. All right. You can mute your mic now if you're done. Mr. Daniel, can see that your hand is up. You can ask your question, sir. Mr. Mr. Daniel, my man, my billionaire investor, you can ask your question. I've omitted you. Daniel, are you there? All right. Are you guys finding it difficult to unmute your mic or to? All right, Mohammed, you can ask your question. Mohammed, your hand was up. Ask your question now, sir. Are you there? 5, 4, 3, 2, 1, 0. I think you don't have any question. Next person. Or Loisios. Am I correct? You can ask. Loisios, are you there? Unmute your mic and ask your question. Hand is up. You can ask your question. Mark, you can ask your question.
I don't have any questions, sir.
Your hand was up.
No, that was to what do they call it? To unmute me since, not now. So I think it has been holding it up
Okay.
since. All right.
Okay. All right, cool. Splendid. That's how I saved your. Splendid. That's how I saved your content. Who is that? Splendid, please ask your question, sir.
Hello, good afternoon, House. Can you hear me?
Yeah, we can hear you, sir.
Okay, good afternoon, sir. Good afternoon, sir.
Yeah, good afternoon.
My question is divided into 4 phases. I don't know if there will be enough time for us to take the question, sir.
Please shoot.
Okay, so my first question is concerning the order flow. How do we frame an order flow? How do we know if the order flow is bullish or the order flow is bearish? That's the first question. Then the second one,
Okay.
can we actually refer to order flow as the bias? If we say order flow, can we still use the term bias to refer to order flow?
Okay. Okay.
That's the second question. And the third question, do we really need to wait for a monthly candle to close before we can decide what to do on the market? Do we need to wait
Okay.
for the monthly candle to close properly, or do we need to wait for the end of the month before we can now do something on the market? Then the fourth question, which time frame do we look to for us to get a reliable pattern that can guarantee an entry that won't stop us out?
Yeah. Is that all?
Hello, sir. Can you hear
Yeah, I
me?
can hear you. Is that
Yes, sir.
all?
Okay. Yes. Yes, sir. Yes, sir. Yes, sir.
Okay. All right. All right. So I'll answer each of your questions individually. So the first question is the
Okay,
question
sir.
of order flow, right?
Yes, sir.
My signal keeps showing. My signal keeps showing. I'm not comfortable. What is it? Let's check. What is it? Are you guys with me? I think the only way is for me to button up.
It's free.
All right.
We can
All
hear
right.
you, sir.
I think I'm comfortable now. So I'll just so your first question is the question of the order flow,
Order
right?
flow.
Order flow
Yes, sir.
simply means trend. simply means trend, the institutional trend, right? Trend.
Yes,
So it's
sir.
always very obvious. When the market keeps making significant levels of higher highs and higher lows, you know that the trend is up, right? You can see in this
Yes,
situation,
sir.
this guy has been making higher high, higher low, higher high. So it's the same thing as trend. Other flow is the same thing as trend, and it's always very obvious. You can see something like this, right? So you can easily interpret that the order flow is bullish because it's making significant levels of higher highs and higher lows. Do you just understand that? It's very simple. The trend is the order flow. The trend is the institutional
Okay.
order flow. Trend, okay, the trend on the higher time frame. Let me not just say the trend. The trend on the higher time frame, like the 12 months, the 3 months, the monthly time frame, is where you qualify the order flow. All right.
Yes, sir.
So, are you clear on that?
Yes, sir. But you didn't answer
Okay.
the question. Can we still say the order flow is the bias of the market?
Yeah, the bias.
Okay. Okay. And the
Yeah.
best time frame to look at for this order flow, is it the monthly or the daily, sir?
The monthly. From the monthly upward, I won't say just the monthly, because the monthly is not just the highest time frame. Lately, trading view has added more higher time frames, like 3 months, 6 months, 12 months. So you can qualify the trend or the order flow or the bias from the monthly time frame upward. Okay.
Oh, yes, sir.
Okay.
Yes,
So is
sir.
that answered? Are you clear on that?
Yes, sir. Very clear, sir.
Okay.
Very clear, sir.
So the third question, that was the first question, and the second question you asked is the order flow the same thing as bias, which I said yes, right? So the third question
That's
here is, do we necessarily need to wait for the monthly candle close to take decisions in the marketplace, right? It is only when the
yes, sir.
market is it is only when the market is in an indecision point that you have to wait for the monthly close. Because the monthly close will tell you a clear story as to what it's doing. All right. So for cases like GBP JPY, we just know that GBP JPY, of course, the bias, how you call it, or the order flow has been bullish, right? So we don't need to wait for any monthly close for us to take any decision, because it's very clear that the direction is very clear. It's up. All right. So in this scenario where the trend, the order flow or the bias is very clear, we just wait for pullbacks to discounts to buy in line with that order flow. That's why on GBP JPY we didn't say that we have to wait for the monthly candle close for us to take any decisions, right? We just said that it has to pull back to a discount, then we buy, because the trend, the order flow or the bias is well
Bias.
confirmed, right? Is well confirmed. So we don't necessarily need to wait for the monthly candle close to wait for a decision to make a decision. All right. But then
Yes, sir.
you compare that with GBP USD. GBP USD has not shown. Or let me go to GBP USD. Hold on. So GBP USD, we are expecting bearishness, right? What is unfolding is we are expecting it to sell. So since it's just an expectation, it's not yet confirmed. All right, it's not yet confirmed. That's why we just need to wait for the monthly candle close for us to know that it is ready to go down. For now, the market can just close within the 3 days. The market can just decide to still go up and all that. It continues to go up. But since we are expecting to short from here, we just have to wait for it to close to give us that clear picture,
Confirmation.
that
Okay.
confirmation. Yeah. So
Yes, sir.
if it closes like this, we know that the first confirmation has been cleared. All right. We can now
Yes,
look for
sir.
other criteria to be met. So the difference between waiting for the monthly candle close and not waiting for the monthly candle close is if the bias is not confirmed. All right. If the bias is not
Yes, sir.
confirmed, then you need to wait for the monthly candle close to confirm that bias. But then, if the bias is well confirmed, the trend is well confirmed, then the need to wait for the monthly candle close is not necessary. All right.
Okay. Yes, sir. Yes, sir.
So,
Yeah.
have I been able to answer your question?
Yes, sir. Yes, sir. You've done that. Then
Okay.
one additional suggestion, sir. Looking at
Okay.
looking at the British pounds US dollar,
Mm,
can we say the bias is bearish? Because I noticed that there is a break of structure.
mm.
There's a break of
Okay.
yes. There's a break of
The bias, as long as this guy has not come up here, it is still trending within. In fact, it is bearish. All right. But then
okay. Yes, sir.
this pullback was really massive. All right. This pullback was really
Yes,
massive
sir.
because if you check, this is not the only area of premium. This is also a premium area, right? But for us to know that if this premium would hold, then it has to close as a bearish engulfing first of all. But be rest assured that the trend, the bias has been bearish for since 2021. You can see it now, right? Because it has not broken this high, so it is still within this string. It is still within this trend, with this string from year to year, right? It's currently here, all right.
Yes.
You get what I'm saying? So the trend is still bearish, but then since this pullback was really massive, we have to wait for a confirmation to know that it's about to short from here. So if it closes at the bearish engulfing, we just know that it's about to short and continue, continue, continue. Of course, once it gets here, we have to reanalyze and all that stuff.
Okay.
So
Yes,
are you
sir.
clear?
Thank you. Yes, sir.
So you
Thank you.
clear?
Thank you. Yes,
All
sir.
right.
Thank
All
you.
right, good. Okay, so I think there's no other question here. No other question. I think we don't have any other question. So any of you who wishes to join the Profem copy trading, you can as well message me on WhatsApp or write me on Telegram. Okay, to onboard you because we're about to take some more positions on gold. I've added some, we've linked some accounts over the weekends and we're about to take more positions on those accounts that's been linked. So if you want to take part and all that stuff, you can message me on WhatsApp 09032364027. On WhatsApp, I'll be there to attend to you personally as to all that has to do with the profit and copy trading. But I think that's all we have for today. Mr. Daniel, I gave you the opportunity to ask question now. So you can ask your question now. Mr. Daniel, you are
Yes,
currently
sir. Can you hear
unmuted.
me?
Yeah, I can hear you.
Okay. Good afternoon, sir.
Good afternoon to you.
Please, my question is on US oil.
Okay.
Looking at it from the daily perspective, it's kind of pulling back to a certain support. So I don't know. So I wanted to know because I'm already in on a buy last week. So but I wanted to add position. So I don't know.
Positions.
Yes. I want to know the exact maybe part that I should be adding more position because the way I'm looking at it right now, it's as if it's coming back to that our entry point again from daily time
Okay.
frame.
Okay. I can't give you particular entry points, but just know I'm also on the buy. It's not even the right time to add positions. All right. Don't look to add position now. We already bought it. Did you buy here? Did you buy here? The same points I bought. I bought somewhere here.
Exactly. Yes. That's my entry
You
point.
bought here. Okay, if your entry point is here, then don't look to add position. It's not even the best time to add any position.
Okay.
Okay? It's not the best time to add position. Even if you want to scale down to the H4 time frame to add any position, it's not really fine. The pattern is not fine because if I was to trade on the H1, I wanted to have any position. Of course, I'll wait for it to come somewhere and then I add position here and all that stuff. But it's not even the best time to add positions. Okay?
Okay.
Yeah.
Thank you. I understand.
So any other question? Yeah. No live stream. So any other question? Any other question, please? No other question, please. I think we should be ending the section now. Okay.
Hello, sir.
Yes,
Hello,
yes, yes. Yes, oh,
sir. What time? Hello, sir. Can you hear me?
I can hear you, please.
One additional question: Which time frame would be advisable to go when it comes to entry now? If you have gotten your buyers and price has pulled back to a discount zone, which time frame would you recommend? Which time frame would you recommend I will go and look for a pattern for entry, or we don't need a pattern before we enter a trade?
No, I don't know the way you trade. Every trader has their pattern, all right? But personally, I take trades on daily and 4 hours time frame. Okay? Take trades from daily,
Okay.
4 hours time frame. So you should have your own pattern, right? Because you have your own methodology and all that stuff. So you know how you trade, you know how you buy, you know what makes for buying entry or your selling entry. Okay?
Okay. All right. Thank you, sir. Thank you.
All right.
Hello, sir. Hello, sir.
Yeah. Yes, yes, please ask your question.
Yes. One more question, please. Concerning U.S. oil, what if this like if the market still pull back to this my entry point, should I say break if or maybe add another position, or I should just let it be?
Okay, now the thing is, what I do is that after taking my entry on the daily time frame, what I do is to check if there is a 4 hours break of structure. So currently I can see that there's already 4 hours break of structure. So if your entry was somewhere around here, you can break even, right? You can literally break even currently to protect your position. Yeah, take offset risks.
Okay. Thank you.
Yeah. So yeah. I think that's the last question, and we'll be ending this section right about now. All right. Emerald, do you have any question? Ramsey, it's fine. All right, we'll see you guys in the third episode of the call, all right, the Black Wallstreet Call. So take care, and if you have any other question, you can message me on WhatsApp or here on Telegram, and I'll be there to answer your questions. So take care, guys, and have a nice day. Yeah,
Boss Edwin, thank you for today.